Hey everybody, welcome back to Now Capital's training. This is video number 2, and today we're going to be looking a bit more at supply and demand. We're going to be going a bit more into detail on how to identify those things on different pairs. We're going to look at how you identify when a trend is bullish and when a trend is bearish. How do you trade those things? How do you set your targets? We're going to just go over like how to identify a break of structure like we did in the first video. We're going to just cover that on a bit more pairs. And I think that is pretty much it. One thing you guys also wanted was how to do it on VIX 75. So we're going to go over VIX 75 as well. And that's it. So let's jump right into this video. Okay, so moving over to the screen, we're obviously going to open up our browser and we are just going to go to TradingView. What I'm also going to do in this video is we are going to open a demo account and we're going to open it in MetaTrader on your computer. And then I will also show you how to place a trade, how to place a stop loss, how to place a TP, how to close a trade, and then also what is a little nice thing about using MetaTrader on your computer. In future videos, we will discuss how to open and close trades on your phone, what you can do on an iPhone versus an Android, and that will be a little sneak peek. Let's go. Okay, so first let's open up. I think let's do a pair we haven't done in a while. Let's do GBP JPY, pound versus yen. I'm just going to open up this chart here. Well, it's been added. Okay, let's open up GBP JPY. This is a very nice moving pair to trade if you are really into Forex. Ooh, the last time I traded this pair was, I don't know back when, but it was years ago. Okay, so I'm just going to clear this chart. So the reason I'm picking up a different pair than we did last time we did Euro USD, it is simply because you guys need to see obviously that this happens on all the pairs like I teach in my training that it does. So when it comes to pairs such as Forex pairs, we're going to go out usually, let's say 1 month. We're going to look at what has happened in the 1 month. So pretty much what we're doing now is clean analysis. On this pair, I'm going to do a full analysis. So I will do maybe some support and resistance, supply and demand, trend lines, this and that. And then on the other pairs, we will just look at the supply and the demand zones. Okay, so I'm going to wait for this to load. This is all the way back till 2002. So not much yet to do there. What we can see here is demand zones. You guys have to remember, a demand zone is the last bearish candle followed by an impulsive bullish candle. A supply zone is your last bullish candle followed by a bear candle, or bear impulsive candle. Now, what I see a lot of you guys doing wrong is you either close your zone too low, too high, you don't draw it to the correct wick, or it's just completely off. And that doesn't really make sense to me. So what we're going to do here is we're going to look at what happens here. This is all the way back in 2007. Now, we can clearly see the market's done something here. So that would be an impulsive move and a breakdown till here. And then obviously got a pullback or a correction. And then it broke structure down here. So let me mark this out for you. So this is just on the daily. Just going to do that. And then we can also do one here, which was broken down there. So it was broken at this point once it closed below. Now, obviously, these are bigger moves on smaller time frames. This is just the daily. So what we're doing right now is we're going to start on the daily and identify, well, this is the monthly. So we're going to identify a monthly supply zone and work our way in. Now, if you look at pairs such as VIX, and those pairs, you don't usually have monthly or like yearly supply and demand zones because those are quite new pairs. They're synthetic pairs that have only been out a couple of years. These things have been out for decades. So how do we draw this? You can see here we have a bull candle followed by a bearish impulsive candle from where the push came. All right, very important. Not from here because that's not a impulsive candle. This is where the push comes from that broke this initial structure. And the same here. From here is where it went down and broke that structure. So let me show you how to draw this. I'm going to make this nice and big so you guys don't get confused. So what do you see here? We have a bullish candle, and then we have a bearish impulsive candle that pushed and broke structure. So what you're going to do is you're going to take a rectangle. You're going to start at the open. Very important. You're going to start at the open of this bull candle. And then you're just going to extend that out, and you're going to draw it to whichever wick is highest between the two. Now I'm going to zoom in on that because we need accuracy for this. Let me change the color of this. I'm going to make it purple because why not? I have no pop filter stuff on the mic tonight. I'm going bougie with the gold. Okay, so you see this, nothing to the left, nothing to the right. Simply the highest wick between the two of them, which seems to be the red wick. So I'm just going to extend that up. And that is it. That is a supply zone marked out on the monthly. Now we're going to do the same for this one. Just want to zoom out here. I recommend if you guys use a laptop that you get a mouse, unless you have a Mac such as I do. The trackpads are really nice, but even then sometimes I prefer to use a computer mouse. So the same here. I'm just going to start from the open of this candle and just drag it to the highest wick between those two. Want to zoom in, make sure that's really accurate. Seems more or less fair. Now what you guys can do is you can draw it a bit to your left just to make it easier to identify that high point. And I'm just going to draw it back because that is our supply zone. Now, the nice thing is this is TradingView. We're not going to use TradingView. I'm going to do analysis for VIX and those pairs on MetaTrader and show you exactly how to do that as well. Now, you can see we have some monthly supply zones here. I'm just going to extend these to the right so we can obviously see it all the way to where we currently are, because these are monthly targets that have to be met at some point in the future. Okay, let's see what happens here. Market clearly came back down. We have a nice little demand here, a lower low. That seems pretty much equal though, to be fair. And market pushed up. So we have a demand zone here. Now, obviously this demand zone has been retested. I'm just showing it to you guys. You can see here, even here, you have a nice little red wick, green wick where you could have bought and it would have been still in profit to this day. And this would have been back in 2011. This is just supply and demand zones, guys, so don't freak out too much about entries right now. This is a demand zone. The last bear candle followed by a bullish impulsive candle. Now, obviously, this broke structure on smaller time frames. On here, it didn't, but you can see if you just look at the wick, that is a high point there, and these are followed by new highs. So that broke structure. I think let's go down into a smaller time frame. So I'm going to zoom out here. I'm going to go into daily. From monthly, I'm going to skip the rest. I'm going to go, well, let's go to weekly. Let's do a full analysis. All right. So on the weekly, let's look at the trend because you guys wanted to know a bit more about trend lines as well. I'm going to delete this monthly demand zone now because it's been tested in the past. Gone. So trend lines, you have horizontal trend lines which are used for support and resistance. You also have diagonal trend lines. These are the ones we're going to use. These are the ones you use to identify the trend in the market. Okay, now same rules for them. You want 3 or more touches. So if we look at a green pair here, we have, I'm looking for 3 touches on this side. 1, 2, 3, perfect. There we go. Okay, David, where's your touches? We're starting here. We have 1 touch, 2nd touch, 3rd touch, right down there. Now, obviously, yes, GBP JPY broke out of this trend right here, and there's a good possibility it's going to continue going down. Now, the question you need to ask yourself is, to where is it going to go down to? Because you have no targets here. Yes, you can see maybe in line with this, you know, just looking at the chart, you can kind of see like levels, but you want accuracy. In trading, you want accuracy. So let me get nice and comfy. Let's look at market structure right now. Okay, we were in a very solid downtrend. From this week, we were in a very solid downtrend. Okay, I'm going to make this nice and accurate for you guys now. So that's 1. Where do you want to start? You want to start here? Let's do that. 1, 2, 3. There we go. Got some fake outs here, but you got 1 touch and a 2nd touch there. And look, it doesn't really matter. This is history. Although it does matter. It's not that it doesn't matter, but it does matter. Let's correct it there. It doesn't really matter where you place it. That's what I'm trying to say, as long as you get your touches. So I'm just going to do that because we've got 1, 2, 1, 2, and 3. All right. Besides the point is market direction changed. So remember what happens when direction change. You have a failure to break structure such as what you have here. You have a lower low formed followed by an equal low right here. And then market obviously broke structure internally there, and here, and market continued pushing up. So let me remove that. And now let's look at demand zones for targets. This is still on the weekly, right? Remember that. So, stupid chip. So, weekly demand zones. Now, guys, what I do recommend you do is change the color of your supply and demand zones so that you know this is a weekly zone, this is a monthly zone, weekly zone, daily zone, a hourly zone, because obviously the longer zone's been there, the stronger it's going to be. So you're not going to make big moves on like an hourly demand zone, but you're going to make big moves if that hourly demand zone falls in like a weekly demand zone or a monthly demand zone. So here we have a weekly demand zone. Just going to mark that all the way down to there. Yet again, guys, let's have a look at how this looks. What's important in this lesson is not how the structure goes, it is how to draw these. Okay, we have the last bear candle followed by an impulsive green candle. It is marked from the opening of the red candle to the lowest wick between the two candles. Now, if the green wick was down here, I would have marked it to the lowest wick. All right, and then from here, we broke structure. Okay, from here came the push that then took out these highs over here. Okay, so this is an untested weekly demand zone. Yet again, what do we have here? We have a break of structure coming from this demand zone over here, which broke these highs with that. You can see that clearly. So if I just draw a little square here, this demand zone here, there, caused the push that broke these highs. Now, the reason I'm not going to mark this demand zone is because if you just hold your mouse there, you can see followed by the cursor line, the zone was already retested there by the nice red wick green candle confirmation, and it pushed all the way up. So that is already a invalidated demand zone. So let's see what's going on here. We have an impulsive move, correction. We have a little demand zone already retested and still pushing up. And then we have what happens, what looks to be happening here is a failure to break structure. And then I'm not seeing any major supply zones, maybe around here, because from here's where the push came. So I'm just going to draw that down. But this zone also seems to already have been retested. And remember, we are still on the weekly. You can see with this week here, 1, 2, 3, this is 4 weeks later. This zone has already been retested, which then broke that structure over here. All right, you got that. So invalidated zone, we're going to delete that because we know it has already been retested. Let's go from the weekly into the daily. Now this is already looking really, really good. Let's look at daily market structure. We don't need to go back that far. We do know we have a weekly low, which can be a really good target. Now let's just look at this. We have some failure to break structures here. We have an impulsive move breaking structure that has already been tapped into by this wick over here. So we're just going to ignore that. We have some bull flags forming here yet again. Nothing really happened. Look, here's the thing. If you studied continuation and reversal patterns, you would see that we have what looks like to be like a bull flag here. If I just draw this, like I'm just going to draw it really roughly, but you know what I'm talking about. We have a little bull flag going on there, right? Little nice continuation pattern breaks out. But you see what happens. This is what I want you guys to notice, and this is why market structure is way more important. It breaks out of this bull flag. It doesn't go up and target like an old supply zone up here. You see, like that could have been a massive move. No, it just comes back to about this point, fails to break structure, drops down, comes back up, and at this point there's still no clear direction. This must have been like a fundamental move or something, probably was. Anyways, but now we can see we've actually broken down out of the weekly trend and we have some structure to look at over here. We're going to ignore these low levels here because they have already been retested. Okay, so let's look at what happens here. We have market going down, breaking structure, no clear daily supply zones forming. I'm going to mark this for you guys here so you can see this is a current level of structure that was broken. All right, so market comes down. Now, obviously, yes, structure was broken here and not here. And then here we broke structure. So where did this push come from that broke the structure? It came from right over here. So you can mark the highest wick between those two. Just like that. And that seems pretty cool. Boom, so now you have a daily supply zone from where the push came that broke through the overall weekly trend. If you want, guys, if you want, you can actually go and just draw a trend line like this to convince yourself we're in a downtrend. But you can see we're in a downtrend on GBP JPY, so you don't really need that. Then what you can do, let's see what happens here. I'm going to zoom in on this. Sorry about that. Let's zoom out here. So if we look internally at what's happening here, we broke structure down here, followed by this lower. We then made a double bottom, which broke these highs on a daily. Now, I can clearly see if I mark this demand zone, you see, it already came back and tapped into it yet again, just about halfway, just below halfway. And it already broke these highs. Now remember, this is just daily. It already broke these highs, making those. So what do you have here? You now have structure broken internally, which means we can either find a demand zone in here in these wicks somewhere and to buy it back up to this untested supply zone before continuing the drop down, or we can just find more breakage of structure internally and then sell it further down. I know it's confusing, but these are the things I'm seeing and these are the things you'll start to spot eventually. And this is very in-depth. This is what you guys asked for, so this is what we're doing. Now, we know this is also a tested demand zone. So I'm going to leave it there for now, just so you guys can see what happens. We're going to go down from the daily to the 4-hour time frame. Now let's look at what happened here. Yeah, perfectly. Now there's no real zone within a zone here. Maybe on a 1 hour there will be one. Around this point I speculate, but what you can see is, and this is why I always say, market comes back pretty much halfway. This is a bit more than halfway, doesn't matter. Even if you place your entries like here, let's say halfway, stop loss below this zone, and then TP's up here. That's still a nice 1, 2, 3. Still a good risk to reward ratio, never less than 1, 2, 3. And you can see market shooting in a direction. So now you actually have 2 examples of that. But now we're going to look for an internal supply zone that was not tapped. We have a supply here that obviously broke this market structure. If you had to draw it, it would look something like this. That's the wrong thing. Anyways, it's going to look something like this. My bad. Boom, 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 boom. And then we can just pretty much do that. And then from here, it crashed down and broke all these levels. So, but you can also see that supply zone that you would have marked there already got tapped. Yet again, you see green candle followed by red candle. That's another sell opportunity you could have had. That's another way we enter. You would have taken your entry there. You would have put your stop loss just above this. And you would have put your target just in front of the zone. Now you see this is a 1-2, not even a 1-2, so I wouldn't take this. We trade the higher moves. You can see the supply zone has already been invalidated. So now obviously you know you've seen 2 versions of entries now. You've seen the wicks. which we had right here. You've seen that coming back halfway into the zone, which we use mostly. You've seen those two now. You've also seen it get violated a couple times. Now let's see what we have here. We have structure breaking there. We have a little supply zone down here. This is now a 4-hour supply zone. And yet again, look at this. We have market coming back, tapping in just about halfway, giving you another sell opportunity. Let me just clean that up for you. Stop loss just above the zone. And then we have TP yet again, just in front of the zone. That's a nice 1 to 12. Look at this. So even if you got faked out by this one, well, this would have been a 1 2 3 with a very low entry. I wouldn't have shared that. I would never take that because it's less than 1 2 3. Bit more patience. Yet again, market break structure, comes back, taps in about halfway. Just look at this. Look at this. Halfway, doesn't come close to your stop loss, gives you a nice 1 to 12, almost 1 to 13 entry on GBP JPY. Now remember, this is still just internal small moves, but this is a 1 to 12 risk reward that you could have taken. Now, most possibly, what you can see is happening here if you are still holding this trade. And this is only if. Look at this. We broke structure there as well. Which now means we are already going to tap into a already tapped into demand zone. So we can remove that. And what did I say? Depending on the time frame you enter in, you always chase 4-hour or daily supply zone. So let's go back out to a daily. Let's go out to daily. Now we don't really have daily supply zones marked out or daily demand zones marked out to retap into. So we could have targeted just one of these lows, maybe right around here, like let's say this wick. Because if you were to draw support and resistance, you would also see that this is a very, very strong price level for GBP JPY. So we can also just do that. Just put it in front of it. That gives you a nice 1 to 37.8, almost 1 to 38 risk reward ratio. Now remember, please do remember, we still do have an untapped supply zone up here. So I'm going to leave this running to see how the trend or how the market keeps running on GBP JPY. This obviously depends on fundamentals. We have to break below this zone right over here as well, which is right around 155.67. Once we break through that, I'm pretty sure we will come back and tap one of these zones down here. There's no real zones that I'm drawing down right now, but we can look and see maybe we have a untapped demand zone. Maybe down here. That seems pretty valid. There seems to be like one that hasn't yet been tapped into. But you guys have, so on this pair, you guys have now seen the two ways that we enter. You've got the green candle, the red candle, or vice versa, red candle, green candle, depending if it's a supply or demand zone. You've seen it come back halfway into zones and pushing off multiple times. And now you've also seen this nice setup play out here. Now, yet again, if you were to take the first original 1 to 2 risk reward ratio trade, you would have gotten stopped out because the market only came back down to here and not to where your TP would have been. But just a bit more patience, you got the nice 1 to 12 trade, I believe, to up to here. And you can actually leave this running. So I'm going to leave this running. Now remember, if you plan on trading GBP JPY, you have an untapped daily supply zone up there, up here at, what is this price? 166. That is a very good price. So that was one pair. Let's look at another pair. I'm going to clean another pair up. Let's look at GBP USD, maybe pound dollar. It's a very good pair to look at. This is a sell I took a month back, which also ran really, really nicely. It might actually be on a nice selling trend right now as well, but I'm going to clear this up for you and we are going to look through this thing as well. So yet again, for this, let's go out to the weekly. I'm not going to do monthly for this one. Let's do the weekly. And we can see what is happening with GBP JPY. We seem to be on a nice, almost consolidating downtrend, if that makes sense. What do we have here? We have a weekly supply zone because we broke structure down here. And I didn't see this market being tapped into. Yeah, no, it's been tapped into already. You can just pretty much see you were to draw your supply zone here, that's about halfway. It's been tapped into this, so that's invalidated. So let's skip to the current weeks of, this is 2021 already. Okay, so let's go all the way back here. Let's look at market structure. We broke a zone. Now we just simply look for supply zones down here. That's very small. There we go. There we have a nice little supply zone. I'm simply going to draw that up like that. And that seems pretty much fair. Let me just go and correct this, because we only need the one here. There we go. Going to draw to the highest wick. That is perfect. And then we can obviously clearly see market is on a downtrend as well. So we're going to just take a trend line. This isn't going to be accurate. I'm just showing you guys. You can clearly see the market's going down. You can clearly see you have an impulsive move, corrective move, impulsive move, corrective move, and an impulsive move. Here we have another supply zone. This supply zone has obviously clearly been violated, because you can see the market just completely smashed through it up here, if that makes sense. Yeah, you can just see the market smash through it. Yet again, guys, please take note on how you draw a supply zone. Here's a good example. If you have a supply zone like this, green candle, opening of the green candle, and then the highest wick between the green and the bear candle, look to your left. You've got a red candle with a wick that's pretty much the same height, but if this candle next to it was, the wick was higher, you would have then marked to that wick as well. But this has clearly just been violated, absolutely destroyed. So I'm going to delete that. Now for the weekly, I'm going to go down into the daily. I'm actually going to share this trade with one of the members who is in America right now, because he loves this. So even on the daily, you can see a much clearer downtrend. Market just going down, crashing, dying. That's the pound dollar for you. So now let's look at this without drawing trend lines. Let's look at this. Impulsive move, corrective move, impulsive move, corrective move, impulsive move, corrective move. Failure to make a new low. We have a nice little demand zone down here, because from here we get a push that breaks these highs over here. So let me draw that out for you so you guys can clearly see it. All right. And then you can see this is where we have the daily demand zone. You can see that nice little bear candle followed by a green impulsive candle, which then pushes and makes a new high. So we're going to zoom in here so you guys can clearly see how I draw this. Just to down there. Boom. Perfect. Opening of the red candle, lowest wick between the two. That is it. That's done. That is your demand zone drawn. Now let's look at where structure gets broken again. Structure got broken right over here. Market has not tapped into the zone yet. Structure got broken here. Let's look for demand zone. Boom. Here we have another demand zone. I'm just going to draw this like that. Cool. So here we have another demand zone on the daily. This seems pretty cool. And then let's look what goes on here. Nothing new. Another demand zone. But this one, you see? Boom. Little red candle, green impulsive candle. This one, it has already been tapped into. You can clearly see that on the daily. Let me just make that perfect. Look at this. Even on the daily. Let me lower that. Come now. All right. Even on the daily, you can see we've got the red candle, green candle. But obviously, buying here, TP there, that's not worth it. So this is a demand zone that has been violated already. I'm actually just going to do this right now. Maybe I should do this live on the trade. We have a supply zone up here that was tapped into. I'm going to share this on the group actually real quick. Forex signals, sell GBP, JPY. And then let me do this for you guys real quick. This is a very, very, very late entry. I don't recommend this at all. 2.1, I'm going to do that. And then we have stop loss 1.24690. 1.24690. TP is, TP1 will be is 1.14490. And then TP2, we can make TP2, I'm going to bring all the way down to here. TP2 will be 1. Actually, this is how you place it. I just TP1 was a bit lower. 1.10791. 1.10791. I'm going to copy this. No, man, go away. Copy. I'm just going to post it in discussions. Posted on hashtag Forex signals. All right. Cool. Let's get back in. So now we already have a nice 1 to 4.9 risk reward ratio, and we should be running in profits. Guys, this is a very late entry. If you've taken this, please make sure you watch this video so you can see how this is done. The reason I've taken this trade, we've got a supply zone. We broke structure, market comes back, taps into it, and we got 2 little nice demand zones here that have been untested. So we have a TP1 and a TP2, and let's leave that running for now. I'm pretty happy with that. You see, this might look like a demand zone, but it hasn't broken structure and made new highs. So I'm not even considering this. Okay, you've actually seen me take a trade and share a trade right now as well. Let's open up Deriv, create a demo account, and then we are going to wait. Actually, before I do that, let me just share this with the group. Save it on the desktop, that's fine. I double click this. Let's do this. Why daily late entry? I'm just going to share this on Forex as well, because I'm not really sure who of you guys can actually see this right now. GBP JPY late entry daily. And I'm just going to do this. You guys are absolutely amazing, but you all talk a lot. So let me just give you permissions real quick to chat. Cool. Can you see this in the Forex signals group? Busy filming and saw this. Cool. Let's go on to open a Deriv account, and then we are actually gonna set up a demo account. We're gonna open it in MetaTrader. This video is already 30 minutes long, and then from there I'm gonna show you how to place trades on Deriv as well. Okay, so we're gonna open a new tab, Deriv. Let's do this. We are going to log in. This obviously uses my things, and then I just log in. Okay, I've got some clean Deriv accounts here for you guys, so you don't need to see any money. You see a nice clean account. Now let's go to demo and let's take a demo account. I think this is a synthetic demo account. Okay, let's add an MT5 account. I'm going to do that, and that should be good. Nope. Yeah, come on. There we go. Beautiful. So I'm going to say trade. This is going to be my Deriv demo setup. You guys can see that I don't really care. Not planning on using that. And then let's open MetaTrader. That is loud. Cool. Yet again, for those that do not know how to open an account on MetaTrader, we're going to go to File, Open an Account. We're going to go to Deriv. Now, this is a demo account I'm adding, so I'm going to say connect with an existing account. Deriv demo. The login ID is that. I'm just going to copy that there. And then I'm going to do my password. Perfect. We're going to say finish. And I believe that is it. We should be in. It's going to load. Give it a couple of seconds to just refresh all its things. Let's see how GBP JPY is doing. We can close that down. Running in profit, new daily candle just opened. We just passed midnight here in South Africa as I'm filming this. Now, guys, you might see maybe like a little retrace. That's okay. Don't stress too much. Let's go down to the 4 hours. I just want to see what's happening here. Look at this. It's pretty much nice. Nice break of structure as well on this coming from that. Yeah, I'm pretty determined. Now, look, our entry is a bit late. Our entry would normally be here in the middle of the zone. So do excuse me, but I know you guys are all eager for signals. So those trading Forex, you have a nice 124, 125 risk reward trade. Now, if this entry was up here, it would have been a 1-2-15. Just, yeah, you guys can see what a late entry does to your risk to reward ratios. Anyways, I'm going to save that. We're going to get back to that in the future. And now that we are active on MetaTrader, look at this. I'm going to go to object list. Where is that? And I'm simply going to clear this chart. Okay, guys. So now that we are here, we know we're trading a demo right now. Got $10,000. Oh my goodness, look at VIX 75 falling off the cliff. Let's not freak out. I'm going to close all this down so we've got a nice big chart to trade with. So, how you analyze. Now remember in the previous video, the first video, we set up all these tools up here. You can use plus and minus to log in. Let's look at this real quick and simple. We have a nice daily demand zone happening right here, and I believe that is what VIX is targeting right now. So, let's draw this out. I'm going to change these colors for you as well so you can clearly see it on the video. So we're going to go to properties, common. We're going to go to snow. We're going to change that to like maybe a little orange. No, it's not going to look too nice. I'm going to do like a little light blue. There we go. So just so you guys can clearly see how this candle is drawn. The opening of the candle, and we're going to go to the lowest wick, which I can now not see here. I'm just going to close that out like that. There we go. Cool. Now let's look at this as well. Even though we're still on the daily, yes, VIX is pushing down. We have internal structure here, and yes, VIX has in fact broken structure right there. Does it make sense? Just right there. Which means we also now have a little supply zone up top here, which we can mark. Guys, this is really simple. It's just going to take a lot of time to understand and be able to see all these little things. Remember, we are still on the daily. So what is the plan? You need to look at the charts and say, okay, we have a plan. Wow, if we look at this, VIX has done nothing but die, literally. We are still in this downtrend. This is not a very accurate trend line, but you can clearly see we are still in this downtrend. What we might have here is pretty much just the bottom of the downtrend going down. If you draw something like that. Oh my goodness, this is terrible. My mentor will kill me if he sees this. Even if you draw something like this, guys, you can clearly see this is just... we have load shedding. Hold on. And we have load shedding. I hope you guys can see me. And we have load shedding. This is beautiful. Welcome to South Africa. Cool. So you can now see on the daily we have this. We have broken structure as well. Even if you want to draw this little pennant thingy here that I'm not going to care too much about. You've got this little flag thingy there. I'm not going to care about that now. Look at this. This is a supply zone. This is your next target. For now, let's look up here. We've got an impulse corrective move. And we have an impulsive move breaking structure down there. And you can pretty much just draw that all the way out. Now, here's what I want you to notice. Look at how we have a candle next to that with a higher wick. This is now where we will use that higher wick. But yet again, just to the opening of that candle. And that is pretty much it. Unselect. And then we have impulsive moves, and that is it. So this is our first supply zone. So if we're going to look at buying, this is going to be our first TP. And then this will be our second TP on a daily. Let's go down into 4 hours. Look at this. Now you can actually see this internal structure that was broken by VIX. All right. Seems pretty clear to me. We don't actually have a zone within a zone on 4 hours. Let's go into 1 hour and let's just zoom out, see if we have a little demand zone here. I'm going to turn off auto scroll so I'm able to actually go and zoom in. Let's just go back all the way. This is where we want to be. Now, let's see. We don't really have a low demand zone here, so I'm just going to stick to the middle of the zone. If you want to know how to place buy and sell limits, this is where we're going to get into it. I'm going to zoom out to the daily so it's easier to see. What I'm going to do is, you want to hover more or less around the price that you want it to be. You're going to right click, and I'm going to say for this, I'm going to put a buy limit. Yes, I understand the terms and conditions. And now, I'm going to say buy limit, and that is it. But now, you don't have a stop loss or a TP. So, let's do this. Let's put a random stop loss. We're going to modify this order. Modify. Stop loss. I'm going to say, what is this price down here? Let's actually go out. Let's look at this price down here. If you use this little cross thing, it's going to show, you can actually see price. So let's do the price right down here. That is going to be 300,222. So now let's modify this. 300,000 and then 222. Modify. Now you can see we have a stop loss. Now here's the cool little thing about derivative. If you hover on this, it shows you minus $15. That's quite a big stop loss. But if you drag this around, look at the left. Look on the left. You can actually see $13, $25. This is the nice thing about using MetaTrader on your computer to trade. It shows you in dollar value how much you're risking and how much you lose. Like, what is your stop loss? What is your TP? Now, if we can actually move this, I think we can actually move this. We can move the whole thing. So I'm actually going to move this a little bit down to about there. Guys, also, this is not a signal I'm giving you. I'm not giving you this. You have to wait for actual break of structure in the zone before taking entry. And then I'm just going to place this down there, which gets us down to about $10. $10 seems fine. But now we also need a TP. So TP1 is going to be just above this. Let's see. Do we have other supply zones here? No. So TP1 is going to be just above this supply zone, which is going to be 572.223. I think that's a really good supply zone. 572.223. So now we are literally risking $10 on $262. But remember, we have a TP1 down here as well. So what you can do is you can actually take this take profit and put it down here in front of the zone for your TP1 position. If you see market break through the supply zone, you can then hold it all the way up to TP2, which will be up here. Now, what if I wanted to place a trade right now? Let's actually see what's happening. You look at this, it's going down. There's no way for you to just place a trade right now. But for the sake of this video, I'm going to show you how you place a trade. So let's zoom out just to the daily because I don't want you to see this horrendousness. So you're going to click on this little thing up here that says buy and sell. Now we have a thing called one-click trading, which means instead of saying buy and putting a stop loss and a TP, you can just hit entries, buy, sell, sell, sell. But you have to accept to the terms and conditions. So 2 ways to place a trade. I've shown you how to place a buy limit. It's going to be the same for a sell limit. You're simply going to go here, trading, sell limits, or buy stop. Okay. Another way to place a trade, right click, trading, new order. And I can literally say, I'm going to sell this down with a 1.0 lot size because I'm crazy. My stop loss is going to be 372.913, 372.913, just so I can place this. And now you can see you have a sell taken there. There's your stop loss, and I'm going to put a TP. What's now nice is because you have an entry, you can click on your entry and just drag it down. It's going to show your TP value, $40. So my stop loss is currently $35,000. My TP is going to be $35,000. If I was to place a buy right now, trading, new order, I'm going to take a buy. Look, I've just bought. So now I can click that. Oh no, that's my stop loss. So let's close this one order. So we're going to go to view and we're going to say toolbox. I'm going to close this sell position that I have on $12. Now, that's actually how you close a trade. You can just click the little X here, or you can right click and choose bulk and then close all options. So now I don't actually have a position. So let me buy. I've just bought. So now that I have a buy, you can literally click on this entry and just drag and look on the left. It's going to show you your TP. $200. Boom. So that's 195, 106, 200, boom. So that's the nice thing about using MetaTrader. You can buy, you can like place orders just like that, hit entries, and then just adjust your stop loss and TP afterwards. That's personally what I do. So when I can enter, I simply hit buy or sell, and then I just quickly go and I click and drag and I place my stop loss and my TP. That gives me the exact amount I'm risking. It's much quicker to then just go place it, and then I can just copy the values, the price values of it. So I think that's pretty much all I needed to cover in this video. It was a more in-depth look at supply and demand. I've shown you now how to obviously open an account again on MetaTrader. I've shown you now how to trade with MetaTrader. I believe that is it for this video. Thank you, load shedding. The next video, we will cover different topics, and I will also yet again ask on the group what you guys want to know. But this is the second video, and then I will see you guys in the next one. Here's some ASMR. Now capital. Cheers, guys. Have a good one.